Betting on the government's backing, a look at sector investing with government involvement. Investing in the stock market can be like navigating a vast ocean full of potential rewards, but also with hidden currents and unpredictable storms. One strategy that some investors use involves setting sail towards sectors that might benefit from government involvement. But is this a guaranteed route to smooth seas and overflowing treasure chests? Let's dive in and explore the pros and cons of this investment method. Riding the wave of government support. The allure of government involvement is undeniable. Governments have significant resources and influence, and when they decide to prioritize a particular sector, it can send a powerful signal to the market. This can lead to increased investment, infrastructure development, and research funding, all of which can act as tailwinds propelling companies in that sector forward. Imagine a strong current pushing your boat towards a treasure island. Government involvement can be like that current. Types of government support. There are various ways governments can get involved in a sector. Some examples include direct investment. Governments might directly invest in companies or infrastructure projects within a specific sector. This can be a major shot in the arm for fledgling industries or those undergoing rapid development. Subsidies and tax breaks. Financial incentives like tax breaks or subsidies can make it more attractive for companies to invest in a particular sector. Think of it like the government offering you favorable wines to fill your sails. Regulation and standards. Sometimes, government regulations can create a stable and predictable environment for a sector to flourish. Imagine the government building lighthouses and chartering safe routes. Clear regulations can provide guidance and stability for investors. Potential benefits. Investing in sectors with government backing can offer several potential benefits. Potential benefits. Sector investing with government involvement. Increased growth potential. Companies in these sectors might experience faster growth due to the various forms of government support they receive. Reduced risk. Government involvement can provide a certain level of comfort to investors, as it suggests a long-term commitment to the sector's success. Imagine having a lifeguard nearby when venturing into potentially rough waters. Improved infrastructure. Government investment often leads to improvements in infrastructure related to the supported sector, which can further benefit companies operating within it. Think of the government building better roads to facilitate trade and transportation within a specific industry. But beware the hidden reefs. While government involvement can be a positive force, it's not without its risks. Here are some things to consider. Risk factors. Sector investing with government involvement. Uncertainty and dependence. Government policies can change, and sectors that were once heavily favored might find themselves out in the cold if priorities shift. Relying too heavily on government support can be like anchoring your boat in a shallow bay. A sudden change in tide could leave you stranded. Inefficiency and corruption. Government involvement can sometimes lead to inefficiency or even corruption. Bureaucracy and red tape can slow down progress, and misuse of funds can undermine the intended benefits. Imagine encountering a fog bank or a hidden reef while following the government's charted route. Not all government interventions are well executed. Limited scope. Not all government involvement translates to overall sector growth. It's crucial to carefully evaluate the specific type and effectiveness of government support before investing. Just because the government is involved doesn't guarantee smooth sailing. Conclusion. Investing in sectors with government involvement can be a strategic approach, but it's not a guaranteed path to riches. Carefully weigh the potential benefits and risks, and conduct thorough research before setting sail. Remember, diversification is key. Don't anchor all your hopes on a single government-backed sector. By understanding the currents and navigating cautiously, you can increase your chances of a successful and prosperous voyage in the ever-changing sea of the stock market.